A Webull margin account allows you to borrow funds from Webull to increase your trading capital using your existing portfolio as collateral. This leverage can amplify both gains and losses. With a margin account, you can control larger positions than you could with just your own cash. Remember, margin trading involves significant risk, including potential forced liquidation of your assets if your account equity falls below the required maintenance margin. To be eligible for a Webull margin account, you generally need to be at least 21 years old and a U.S. resident. You'll also need to open a Webull account, which typically starts as a cash account. While the minimum deposit to open an account might be low, having at least $2,000 or more is recommended for margin trading due to regulatory requirements and risk management. Webull will also review your credit history and trading experience as part of the approval process. Pattern day traders have different requirements. Please see the section on that later. To enable margin on Webull, first ensure you meet the eligibility requirements. Open the Webull app and navigate to the Account tab. In your account settings, look for the Margin section. Select the option to enable margin and follow the on-screen prompts. Complete any necessary agreements. Approval is often instant for existing users, but may take 1 to 2 business days for new accounts. Buying power represents the total value of assets you can control with your margin account. It's calculated as your equity multiplied by the leverage ratio plus any existing cash. For example, if you have $5,000 in equity and a 4:1 leverage ratio, common for day traders, your buying power would be $20,000. Webull displays your real-time buying power in the app. Note that overnight positions usually reduce leverage, e.g. to 2:1, and buying power resets daily for pattern day trading, PDT accounts. Maintenance margin is the minimum equity level you must maintain in your margin account. Webull requires at least 25% equity. If your account value drops below this threshold due to market losses, you'll receive a margin call. This requires you to deposit additional funds or sell assets to restore your equity above 25%. Failure to meet the margin call can result in Webull forcibly liquidating your positions to recover the borrowed funds. Pattern day trading rules apply if you execute 4 or more day trades within 5 business days. Webull enforces these SEC regulations, requiring a minimum equity of $25,000 in your margin account. PDT accounts typically have 4:1 leverage. If your equity drops below $25,000, your trading activity may be restricted or margin access limited. Margin trading carries significant risks and costs that every investor should understand before enabling this feature on Webull. Leverage can magnify both gains and losses. While it allows controlling larger positions, a market downturn could wipe out more than your initial deposit, as shown in this leverage diagram. Borrowed funds incur daily interest charges. Webull currently charges around 6.99% APR, calculated daily, which adds up quickly and eats into potential profits. If your account equity falls below maintenance requirements, Webull may force liquidation of positions, selling assets at potentially unfavorable prices and temporarily restricting account access. Always understand these substantial risks and costs before deciding to trade on margin. Margin trading requires staying informed about changing policies and conditions. Keep up to date with Webull's margin policies, regulatory changes from the SEC, and overall market conditions. Be aware of potential increases to margin interest rates that could affect your costs. Use risk management tools like stop-loss orders to limit potential losses. These orders automatically sell your position if it drops to a certain level, helping protect your investment. Consider starting with a small margin position to understand how leverage works before increasing your exposure. This gradual approach helps you learn without risking too much. Consult a financial advisor to determine if margin trading is suitable for your investment goals and risk tolerance. Professional guidance is essential for making informed decisions. Note that Webull is piloting AI-powered risk alerts that simulate margin scenarios, helping reduce defaults by providing real-time insights.